What's going on, guys? It's Andy here. Welcome back to the Andy Kandola Show. So in today's video, I want to go ahead and share with you guys the 5 newest stocks that I just added in my portfolio. Now guys, if you're new to this channel, I have a portfolio that I call my bucket list portfolio. It's a dividend-based portfolio. Basically, all the stocks in this portfolio do pay me out a dividend on a monthly or quarterly basis. So I'm going to go ahead and share with you guys 5 stocks that I've purchased within my stock portfolios. We'll go ahead and break it down. I'll share with you guys why I added these stocks in my portfolios and where I see the potential with these companies. Now, before we go ahead and jump into that, I'm going to share with you guys where this portfolio currently stands. This portfolio is currently sitting at $64,426. In the last day, guys, I did lose some money. The market was down. The market has been extremely volatile lately. This portfolio is down $334.59 or 0.25% in the last day. If we go ahead and look at the last week, the portfolio is up $388 or 0.61%. Over the last month, the portfolio is down $2,196 or 3.52%. And then overall in the last quarter, it's up $3,470 or 7%. And then guys, finally, all time, the portfolio is up $4,889 or 13.81%. So I am overall happy and satisfied with where this portfolio is at. Now, I've been investing in the stock market for over 15 years, but I started this dividend-based portfolio just over 10 months now. Now guys, here's the thing. The market overall has been down a lot, and we've had some crazy news in the market. I mean, just in the last day here, Disney did announce that they're looking to go ahead and lay off 28,000 employees. So that's not good, and obviously we can see why, because the coronavirus and this pandemic has really taken a hit overall in the entertainment sector. So Disney is looking to go ahead and let go of 28,000 employees. Now overall, as far as the market goes, the market was down today as well, and the market was down 131 points. If we look though, since the pandemic, the market has been slowly climbing, and we are sitting at right around 27,452 points as far as the Dow Jones goes. So the market has rebounded, but my thing is, with the election coming up, and because we're still in the middle of this pandemic, I do believe that we're going to still see a bit of a correction in the market, and I do believe that the market will still go down till the end of this year. And I think once we get into the beginning of next year, the market will start kind of balancing itself and start getting new highs. But overall, for the rest of the year, I am predicting that the market's going to go ahead and kind of trade sideways or even go down at least 10% from here. But now, just jumping into the portfolio, the first new stock that I actually added in this portfolio is going to be in my consumer discretionary sector. Now, I do have my portfolio broken up into 11 different sectors, and it's a nice way for me to go ahead and diversify, and then I can allocate a percentage towards each sector. If you guys want to see my whole portfolio, I will have a link in the description so you can go ahead and check that out. But the first stock here is gonna be Domino's Pizza. Now here's the thing with Domino's Pizza. You're probably thinking this is a very interesting choice here. Now Domino's Pizza actually does pay out a dividend, but here's the thing, guys. During this pandemic, this stock has actually outperformed the market. And when I say they outperformed the market, I mean they're up 75% just in this last year. And if we look at the year to date, they're up 43%. And if we look at the overall 10-year chart, I mean, you can just tell here that they're up over 3,081%. Now, the reason why I really also like this company is because they do pay out a dividend. Now, if we go ahead and look at their dividend yield is 0.73%. And if we look at the dividend safety score and Simply Safe Dividends, they're giving it a 55 dividend safety score, so it is borderline safe. But now, when we go ahead and look at Domino's dividends, this company has consistently grown their dividends by 20% every single year since they started paying out their dividends consecutively. They've been paying out their dividends for the last 7 years, and they've been growing them by an average of 20%. I really like where Domino's is headed, because Domino's during this pandemic has really figured out their takeout game. Now guys, I am also in the restaurant industry, and I do own a couple of restaurants at this point, and I can tell you, takeout business, if you've figured out takeout business, you've figured out the restaurant industry. And Domino's, their app is actually one of the easiest apps to use when you want to go ahead and order food, or order pizza, I should say. Additionally, the quality of their food and the quality of the pizza is pretty superior when you go ahead and look at and compare them to other franchises. I mean, I do think their quality is a lot better than even local restaurants and local pizza places, but overall for a franchise that has over 11,000 stores, they have figured out the quality of their product. And in the food industry, quality is one of the most important things. And they've also figured out how to deal with this pandemic and raise their profits during the pandemic, and they're killing it in their takeout game. Now, I will also tell you guys that one of my cousins is actually a franchise owner in Domino's, and he is growing. I mean, he had one store at one point, and now it's only been about 3 years. He's on his 4th store. So this company is growing, and because I have family that's in this business, I can tell you guys, just based on talking to them, that I see a great potential for growth with Domino's Pizza. So Domino's is a good fit within my portfolio because they grow their dividends by 20% on average, as well as this is a growth company. Basically, they're growing their dividends every single year. Now, I just started adding on to this position. Domino's is near new highs, but I'm not concerned. I'm basically looking to invest in dollar cost average in this company for the next 10 to 20 years. But next, let's go ahead and jump into the second company that I actually added in this portfolio, which is going to be in the real estate sector, and that is going to be Store Capital. Now, in regards to Store Capital, I have about $795 invested in this company. Now, if you're not familiar with Store Capital, basically they're considered a real estate investment trust. So they're a landlord that goes ahead and leases to smaller businesses, or I should say smaller and mid-sized businesses. So they're basically B or B plus rated type of businesses, and then they go ahead and collect that rent. So they're basically a landlord on a larger scale. Now, the reason why I really like Store Capital is because of their overall management, and in general with real estate, guys, I don't believe real estate is going to be going anywhere anytime soon. If anything, real estate in the next 5 years, I believe, is going to be at all-time highs. Now, if we go ahead and look at Store Capital, in the last 1 year, they have been hit because of this pandemic, so they are still down about 25%. The stock used to trade at right around $40, and since the pandemic, they're trading at right around $27 at this point. I really do like Store Capital, and their CEO has mentioned that they are going to go ahead and stick with their dividends. So their dividend was at risk at one point, but now they are going ahead and backing up their dividends. Plus, guys, with Store Capital, they actually collected 88% of their rent last month. So that's a great sign because a lot of these tenants are starting to go ahead and pay their rent. So this is actually the highest rent collection that Store Capital has had. Now, additionally, if we look at Store Capital, they are considered borderline safe as far as their dividend safety score goes. So they are a 50 on the dividend safety score. But the nice thing that I really like about Store Capital is their dividend yield is over 5%. Their current dividend yield is 5.28%. Plus, guys, if we go ahead and look at their dividend growth rate, Store Capital's average dividend growth rate the last 5 years has been by 64%. And over the last 5 years, they've consistently gone ahead and paid their dividends, and they've been growing their dividends for the last 5 years. But that's my take, guys, in regards to Store Capital. Another stock I'm going to actually go ahead and look to invest more in the following month, and especially as this company's down in price. But now, jumping into the third stock, which is going to be Enterprise Products Partners. Now, Enterprise Products Partners is basically within the energy sector. Now, overall in my portfolio, I only have 1% of my portfolio in this sector. Now, within the energy sector, guys, personally, this was a stock that I was kind of on the fence about adding in my portfolio just because of the overall growth potential. But here's the thing, the energy sector has been hit a lot lately. So I thought this would be a great opportunity to go ahead and invest in a stock that I believe will consistently pay me out a very big dividend. Now, in regards to the stock, they were currently trading before the pandemic at right around the $25 to $28. I mean, they were going as high as $30 at one point, but since the pandemic, I mean, this stock is really cut in half. So they're currently trading at $15.93. But guys, if we go ahead and look at this company, Enterprise Products Partners, or EPD, they have a safe score as far as their dividend safety goes. So they have a 65, which is a safer score. Plus, look at this dividend. I mean, this dividend is nuts. they're paying a dividend of 11.17%. That to me is an extremely high dividend for a stock that's actually considered safe as far as their dividend safety scores. Now, if you're not familiar with EPD, basically they are one of the largest firms within the US when it comes down to oil and gas storage and transportation. Now, I did a lot of homework on the stock, guys, and they're actually pretty diversified, and they have a lot of pipelines within the US. And as we can tell from this chart, I mean, they have a lot going on as far as their pipelines go. They are in different sectors. So they have the pipeline business as far as their assets go, they have storage business, and they have export business as well. So I am pretty comfortable with having the stock in my portfolio, especially given that I'll be making 11% on the stock. Now, overall, long term, because battery cars and electric cars are kind of taking over as far as the new wave and the new trend goes, but I believe there's still going to be room for some of these companies in the gas and oil space, because we're still going to need gas and oil in some of these other sectors, as far as airlines, as far as cruises, as far as just some of the other uses for that type of product. And with this company, I believe EPD is going to go ahead and just diversify as they go ahead and grow. And I also looked at the balance sheets, guys. I mean, this company has very strong balance sheets, so I don't see them going anywhere anytime soon. So this is my third pick that I went ahead and added within my portfolio. Now, additionally, as far as their dividend growth goes, they've been growing their dividends consecutively for 21 years, which was also another plus to me. They're not growing their dividend by a lot, but for a company that's committed to paying their dividends, hey, it deserves a spot in my portfolio. So they've been growing their dividends by 2% over the last 1 year, and then over the last 20 years, they've been growing the dividends by 7%. But guys, this is going to be the third stock within my portfolio that I'm basically looking to go ahead and invest in throughout this coming month. But now let's go ahead and jump into the next two stocks here. Now, in regards to the next two stocks, the next two stocks are actually gonna be in my Roth IRA portfolio, and this is basically my growth stocks portfolio. Now, within this portfolio, the two stocks, or the fourth stock I should say, that I have invested in, and that is gonna be Redfin Corporation, and their ticker symbol is RDFN. Now, here's the thing: if you're not familiar with Redfin, this is basically a growth stock within the real estate sector. This company is actually a real estate brokerage company, and what Redfin really does is that they go ahead and split the commission with the home buyer as well as with the real estate agent. So this company is kind of taking a twist, as far as usually you pay the broker and the broker gets all the commission for selling the house, but with Redfin, they're actually taking the broker kind of out of the commission, where they go ahead and split the commission with the actual person that's selling the house or the seller. So I like where this company is headed, and they're basically taking a new twist on real estate. Now guys, real estate since this pandemic has been hitting new highs. I just seen an article the other day that real estate prices just in the last month were up 4.8%. So as the sector goes up, we look at the stock price, they are up 192% just in this last year. And if we look at the last 6 months, they're up 202%. So for a growth stock that is in the real estate sector that's really taking advantage of this pandemic, what I realized is that companies like this are actually able to take advantage of the pandemic, and they're actually growing at a 10+ rate, where this company would have probably still grown, but they wouldn't have grown by such a high pace. And I do see more and more people starting to use Redfin. This is a newer company that I actually did research on, and that's not particularly in my area as much right now, but because they're on the West Coast and a lot of people are using them within the West Coast, they have a lot of potential to go ahead and grow. And now the fifth company, which is also gonna be in my Roth IRA or my growth stocks portfolio here, is gonna be DocuSign. Now here's the thing, DocuSign is another play on the pandemic, basically because more people are gonna be working remotely and more people are gonna be working from home. DocuSign basically makes it easier to go ahead and sign your documents in a secure way. So this company is another company that just took over during the pandemic, and overall in the last 1 year, they're up 251%. In the last 5 years, this company, they haven't even been around for 5 years. They actually had their IPO, I believe, in 2018, as it shows here. But if you look at the last 6 months, they're up 158%. So as more and more companies go ahead and let their employees work from home, this company has the potential to grow during the pandemic and even after the pandemic, as companies go ahead and look to reduce their cost and have people work from home. Plus, if we go ahead and look in my portfolio, this is a brand new stock that I literally just added in the last day here. So as we can tell right now, guys, I am down in the stock 1% or 0.58, and my current value in the stock is $54.58. So with DocuSign as well as with Redfin, these are the two newest stocks within my growth stocks portfolio. And I do have a couple different stocks with my growth stocks portfolio. I am primarily focused on my dividend stock portfolio because I do want to go ahead and get my income high so I can go ahead and start paying for some of my living expenses. But at the end of the day, I don't want to miss out on some of the growth potentials. So these are some of the growth stocks that I do have invested in. But I will also leave a link down in the description if you guys want to go ahead and check out my Roth IRA portfolio and all the growth stocks that I have in this portfolio, guys. And that's basically gonna be a wrap here, guys. Hopefully you guys enjoyed this video. If you did, don't forget to smash that like button. I like to be fully transparent with you guys and take you guys on this journey and basically document where this portfolio is headed. We've seen a lot of ups and downs so far in this journey, guys, and I will be fully transparent throughout this journey. Whether we lose $5,000 or gain $5,000 tomorrow, I want to go ahead and be fully transparent with you guys in regards to this portfolio. So make sure to keep up with this channel, and don't forget to subscribe to the channel down below just to keep up with all the latest videos. Let me know if you liked any of these stocks and what stock you're basically investing in right now in the comments below. I would definitely be curious. I'm always looking to go ahead and do research on any different stocks, and if there's a stock that you want me to look into, just let me know in the comments below. But thank you guys again. If you are interested in trading, I do use M1 Finance. Personally, it's one of my favorite portfolio apps where you can go ahead and diversify pretty easily with M1 Finance, and they do have an affiliate program where you go ahead and get $10 when you sign up, as well as it helps me out and the channel out, so I do get $10 from that as well. But thank you guys again for watching. Until next time, guys, I'll see you guys at the next one.